One of Wall Street's most bullish strategists says a stock market correction is imminent. This strategist is Tom Lee, an American entrepreneur, financial analyst, strategist, investor, businessman, full-time contributor on CNBC's Fast Money, Tech Check, Halftime Report, as well as Closing Bell shows. Now, this guy has quite the background and quite the predictions. We're going to take what he says into account, as well as where the S&P 500, the overall market, is trading, what might affect it in the near future, and how to prepare you guys for what is to come. The overall market is probably going to shift any other tickers in your portfolio depending on the direction that it goes, and we're at a crucial level. The SPY has hit 500, or the S&P 500 has hit 5,000, which is a very psychological level. It is also a level that is higher than almost every single bank's prediction for this year. For the end of this year, December 31st, right? That means at the point of where it's at now to December 31st, according to every single bank, there is much more room for downside. Now, of course, these predictions can be adjusted throughout the year. They probably will be, and they are also to be taken with a grain of salt. At the end of the video, I'm giving you a stock that I am loading up on in my long-term portfolio, and it's showing extreme strength. I'm going to show you what I see in it. Without further ado, guys, hit the like button on the video, subscribe to the channel. Let's get into it. So the SPY has hit 500, and in yesterday's video, I said we are not at that resistance level. Don't let go of your stock at 500 even. Not financial advice, I'm not a financial advisor, but I thought we were going to go a little bit higher to test this resistance level, and that is exactly what we did, and we got smacked back in this. So if we come over here and we take a look at the SPY on the daily time frame, we are now hugging this resistance level right around 501.50, which is exactly where I said it was going to go yesterday. Where are we going to go from here? Is it too overbought? Are we going to have a crash? According to Tom Lee, he says a stock market correction appears imminent after the S&P 500 rallied 21% over a 14-week period. He says that history suggested the market was about to reach a short-term peak. Now, this was posted on February 6th. And he said the SPY is going to hit 5,000, or S&P hitting 500, and maybe a little bit higher, but a drawdown follows. And he's confident in this. Now, keep in mind, this is one of the most bullish equity strategists on Wall Street giving a bearish sentiment. So it's kind of something that we want to take a look at and say, what does he mean by this? Well, he told his clients that the S&P 500 surged 21% over a 14-week period, and that we might be approaching something that has happened in the past. The history that he's looking at, in 7 instances, he says since 1927, when the S&P 500 rose 13 out of 14 weeks, as it just did, in 4 of those 7 instances, the stock market peaked within the next 2 weeks. So, with that being said, he's saying the SPY may just peak within the next 2 weeks, and where is it going to go from there? He says an imminent market correction also made sense. Imminent, which means immediate, because it would mimic a stock market trading pattern that occurred during the bear market low in October 2022. In October 2022, the stock market jumped 20% for 16 weeks in October 2022, before it staged a 9% correction, then rallied 21% over 19 weeks before it sold off by 11%. Lee said that given the S&P 500 had recently risen by 21%, a drawdown would not be of the ordinary. He is expecting a 7% decline to materialize, which would send the S&P 500 to about 4,600 based on current levels. If we go take a look, this is the exact level. A 7% decline from 500 would bring us to about 464, which you could see that there is support here. It would probably flash down, test 480, right? And then break down even further, trying to hold around 470, ultimately bottoming at 464. This is his theory, and honestly, that would be a healthy pullback. There are a couple other things that I wanted to bring up, but before we do that, let's finish what he's talking about. As to what fundamental issue would drive such a decline, Lee said the timing of Federal Reserve's interest rate cuts could spark concern among investors, especially if the central bank waited too long and the economy began to weaken. So what he's saying is the Federal Reserve cutting interest rates or not cutting interest rates is what could be the catalyst to spark his prediction. If we come over here and we take a look at the FOMC meetings, he says around 2 weeks out, based on history, is when the market starts to correct, and it will be imminent. If we come and take a look, the catalyst that we have 2 weeks out is the March FOMC meeting, March 19th to 20th, and then we have an April, June, July meeting. so on and so forth, right? If we come in March, which is likely, and they say we are not cutting interest rates yet, right? Some people may take this as negative. This may spark a downturn, at least institutional investors letting go, and then it's going to scare retail out. Retail lets go at the bottom, and then institutional investors scoop it back up, right? It probably won't last long, but this is basically what he's saying. This is the catalyst that could do it. However, despite his outlook on the short term, he reiterates that he has a bullish view on the stock market, and ultimately it could rise to the range of 5,200 to 5,400 by the end of the year. This is what you take out of this. Yes, the S&P 500 could correct just like any other play, right? The overall market could correct. It could have a healthy pullback, but in the long term, if you're holding dollar cost averaging, it's probably going to go higher, right? Chances are it'll go higher. However, that does not mean that we miss a huge money-making opportunity if we can spot the decline. If we take a look at the RSI on the SPY, anytime it is this overbought, especially double testing an overbought zone, right? The SPY does have a nice correction. You can see right here from about 460 to 434. You can see right here, this was a harsh one, about 430 down to 350. Even back here, when you have a small one, right? 473 down to 450. Okay, so this would make a lot of sense. 501 down to 464, right? That would make a lot of sense, and that is probably what could happen over the next couple of weeks. So just keep this in mind. Correlation, Bitcoin to the SPY. Bitcoin rallies, SPY rallies, they move together. It's kind of a stash house for institutional investors, and we talked about it in the past. Bitcoin is coming into the halving, which means it's probably going to scale higher. We assume the SPY is going to scale higher over the medium to long term. However, short term, before the halving, a lot of times Bitcoin flashes down. Bitcoin and the SPY could flash down, shake paper hands out, and then make their move. Either way, I'm not selling either. A couple other things I wanted to touch on real quick. Mara as well as Riot. Mara and Riot are just gapping up higher and higher. I personally am not chasing this. I don't think it has the long-term potential. I'd rather just put my money into Bitcoin. But if you are, watch $25.60 on Mara. Watch for a rejection at where Riot's at the 0.5 on the fib. And otherwise, watch $15.80. Now, here are the earnings for the week. We do have some important ones. We talked a little bit about it before, but we have Shop, DraftKings, Roku, Airbnb, UPST, Coin, right? There is a lot of major earnings happening this week. So overall, it will be a fun week. And if you want to come chit chat with me, as well as the most amazing people on these earnings plays or whatever plays the overall market, get in the Discord. The link is right under the video. It's the second link. It's also pinned in the top of comments for you guys. It's a coffee a month. Level up your trading journey. Come have fun with us. Request videos. Post your gains. Post your losses. And if you're thinking about joining, press the link and watch the trailer at least, right? Also, guys, get your 15 free stocks. We're about to talk about a stock that I am extremely bullish on that I will be adding for the long term, but get your 15 free stocks as well as your 8.1% APY by using my link, signing up for Moomoo, and making a deposit in there. It takes 2 minutes out of your day. You guys will not regret it. Also, they're giving you level 2 order book data as a retail trader for free, so you can see where whales are loading up and dropping off shares, as well as access to trading options, going long, going short, and more. Now, the stock that I wanted to talk about is ELF, ticker symbol ELF. I touched a little bit about it previously about a week ago on members only. This play has been looking extremely well, and a family friend put it on my radar, trading at 174.52. This would be purchasing at an all-time high. I want to let you know that right now. However, it's testing a crucial fib level, and if it breaks over this stock is not gonna blow off steam for a long time. And I think this is easily going to be above a $200 play. Okay, so I just wanted to put this on your radar, let you know where my head is at. Their earnings are doing solid. It's aimed at women, right? It's a beauty company. You already know how that goes. Overall, put this one on your radar. I will let Discord know as soon as I am actually in and confirmed. That is it, guys. Enjoy the rest of your weekend. Have post notifications on. I love you all. Lottery Socks out.